The multi-time frame moving average 4 hours indicator, which is a powerful and versatile tool available for various trading platforms on the comprehensive TradingFinder website, offers valuable insights. From this section, you can download the indicator file for MetaTrader 4 and MetaTrader 5 platforms and run it on your chart. Traders can also read this page to learn about how the indicator works and its functionality. From the Navigator section, we select the indicator file and run the indicator by dragging the file onto the chart. Once the indicator is running on the chart, it starts displaying two moving averages on the price chart. The multi-time frame moving average 4 hours indicator is a special and practical tool that provides traders with multi-time frame analysis by displaying two moving averages across different time frames. When the indicator is precisely activated, the calculation of the two distinct moving averages is exclusively based on the robust 4-hour time frame. This strategic choice allows us to easily and effectively analyze the more granular details present in lower time frames, while simultaneously enabling us to thoroughly review and understand the broader trends visible in higher time frames. Traders can enter a buy or sell trade in the market whenever the two moving averages cross. For example, here the red segment represents the seasonal moving average, which has been calculated on the 4-hour time frame, and the green moving average segment represents the calculation of the seasonal period. When the fast-moving average line crosses significantly over the slower moving average line here, at this precise point, we can confidently enter a profitable buy trade within the dynamic market. Following that, we observe that the price action subsequently enters a sustained and robust uptrend, and we can also effectively utilize these crucial moving average levels as either strong support or significant resistance levels, providing valuable insights for our trading decisions. And if the fast-moving average, which typically reflects shorter-term price movements and market sentiment, crosses below the slow-moving average, which smooths out price data over a longer period and indicates the underlying trend, this specific technical signal suggests a significant shift in momentum. When this downward crossover occurs, it often signals that the shorter-term trend is weakening relative to the longer-term trend, indicating bearish sentiment. Consequently, based on this important technical analysis indicator, we can then consider and subsequently enter a sell trade in the market, aiming to capitalize on an anticipated decline in asset prices. Here we can clearly observe that after a significant uptrend, a bearish crossover has indeed occurred at this precise point, and consequently the price has now entered into a distinct downtrend. In this particular section, we can also effectively utilize the distinct levels of both the fast-moving and the slow-moving averages as crucial support or resistance levels. This allows us to strategically place our stop losses precisely behind these identified levels, or alternatively behind the significant previous swing high or swing low point. This comprehensive approach helps in managing risk more effectively within our trading strategy. Here we see that a crossover has occurred. We could have entered a sell trade at this point or entered a trade if there was a pullback to the area. We place our stop loss behind the area and take our appropriate profit from the long-term price trend. And finally, once again in this section, we see that the price trend has shifted from bearish to bullish, and here too we could have entered a buy trade. In the settings section, under the input tab, we have some options. In the first input, we can set the calculation period for the fast-moving average, which is set to 8 by default. In the second input, we can set the calculation period for the slow-moving average or the second moving average, which is set to 21 by default. In the third input, we can specify the moving average method. You can choose from the available options: simple, exponential, smoothed, or linear weighted. In the next option, we can select the type of price calculation. You can choose from options like close price, open price, high price, low price, and the other items listed here. In the next section, you have the ability to set the calculation time frame. You can choose to use the current time frame, meaning the one you are currently in, or you can specify a time frame from 1 minute up to 1 month here so that the calculations are based on your selected time frame. In the very next input section, we are able to either enable or completely disable the visual display of the second moving average indicator, and in the final concluding section, we can precisely set the specific number of historical candles for accurately displaying the calculated moving average value within this particular part of the interface. By default, it is initially set to a value of 1000 candles, but here, for this specific instance, I have manually entered the significantly larger value of 10,000 candles. It is critically important to just make absolutely sure to note that the specific time frame you carefully select for the calculation of the moving average should always be considerably higher than the current time frame you are presently on. Alright friends, we've reached the end of this indicator tutorial. I'd be happy if you share your comments and suggestions with us in the comments section.